The broadcast is now starting. All attendees are in listen-only mode.
Welcome, everyone. My name is Megan Cox, and I'm the Event Marketing Manager at Kuranos. Thank you for joining us for today's webinar, How Optimized Checking Account Origination Can Create Relationship Primacy, hosted by Soraya Randawa, Head of Omnichannel Experience, and Andrew Hovett, Managing Director. As the industry's leading provider of data analytics and technologies, we are here to help you better attract, retain, and grow more profitable customer relationships for your financial institution. If you have any questions during the presentation, please type them into the question box in your GoToWebinar control panel. This webinar is being recorded, and we will send the recording via email post-webinar. Okay, Andrew, let's begin.
All right. Well, welcome everyone. Thank you for joining us today. We're gonna start off today looking at some data, some benchmark data that we have both from some market research surveys as well as benchmark data we have of participants around their digital acquisition kind of performance. And then from there, we're going to kind of flow into, and Soraya's going to pick up talking really about the experiential elements that help drive stronger performance. In order to kind of kick off, we just wanted to start with a little survey question here and wanted to find out from the participants what percentage of your new to bank checking accounts are originated via digital channels. So we got a couple of ranges here for you to choose from. So wanted to just kind of get a little sense check of what percentage of your new to bank checking accounts are originated via digital. And I see responses coming in. Looks like we've got folks from kind of across all of the spectrum of the answers here. Still see responses coming in, so I'll wait another minute. All right, looks like it's no longer tallying. So as we saw coming in, a very wide range. We've got participants here today from kind of the 0 to 5%, so relatively low volume of digital origination level. What we dive into was a year we survey. All right, we'll have in a second, but essentially we survey around 70 markets across the U.S. And we're essentially interviewing consumers who have recently switched their primary banking relationship. So it's we call it our shoppers survey, but it's essentially those consumers who are switching, right? Those consumers who are in motion. And one of the things that we ask as far as a battery of questions is, what's their kind of preferred channel for digital origination? And I think what's really interesting here, if you contrast it to some of the numbers that we were just looking at, is 70% of consumers actually say that they would prefer to open their new checking account via a digital channel. And if you look, by far and away the largest is on a smartphone, followed by in branch, and then desktop, which has fallen over the years. There's been a real shift as we've moved from more and more people wanting to or preferring to originate via smartphone versus a more traditional kind of desktop or laptop. So you think about that, 70%, how does that reconcile with what we just saw from some of our participants here, where we were looking at, kind of 10 to 20% on average, I think, of digital origination? Well, some of it comes to play in the next slide, because one of the other things we asked is who they are switching to. And what you see in these stacked bars is there is a significantly large number of consumers who are actually not switching a primary relationship at a bank, but are actually choosing a fintech. And even more so is the types of fintechs that they're choosing. So, we've seen strong performance over the last 5 years from Chime. They've had a value proposition anchored on kind of availability of your, paycheck 2 days early, about lenient kind of NSFOD policies and fees, which had really established them as kind of the leading fintech. What's been interesting over the last year or two is we've seen a surge in some other players who we normally, I don't think anyone on the call here today really thinks of as a traditional banking provider. So we have consumers who are choosing the Cash App or PayPal and actually declaring that as their primary banking relationship. This is really showing a kind of a step change in how consumers think about kind of banking services. And so I think as the watch
So just coming back into this, when we think about, you know, the changes that we're actually seeing from digital originations, when we look at our
here is understanding that you're competing not against other banks, maybe, you know, if you were a national bank's relationship, anchored on a kind of contribute to what might be high proportion through. If we looked at the participants on our benchmark, who are very much more of a traditional kind of regional bank, you see the following kind of trend line around origination of digital. And so what we have seen is, if you go back to pre-pandemic in 2019, around 15% of new accounts were being originated via digital. Where we've settled in here is in the kind of high 20%. Now, you might look at all that noise in the middle and say, what was going on in that with that mountain where there was nearly 45 to 50% of digital origination? What the industry was experienced there was high levels of kind of fraudulent account opening, which was driving up the percentage that was digital. Probably as many of those accounts actually were fraudulent and really didn't enter and become like true kind of primary relationships. And what you've seen over the last year and a half is banks have actually improved their fraud controls and have brought themselves into a more kind of stable and steady range at just under 30% of their originations. So again, if we contrast back to what we were seeing in the poll question, we're seeing kind of higher levels of digital origination, especially for some of the mid-size and larger regional banks that participate in our benchmark. The wrinkle is even as you've seen that surge in digital origination, it's not actually resulting in new or additional relationships for banks, right? So what we've done here is we've indexed this back to the 2019 average, which you see there is 100, right? So you had the digital and branch mix back there, and what you see now here through the data through the third quarter of 2023 is roughly the same number of new accounts originated. You see a slightly stronger mix towards digital at 28, but what we've seen is branch sales have actually fallen. So digital is actually, unlike the promise that I think many banks had hoped for, banks and credit unions had hoped for, digital has not become driving incremental new customer acquisition, but is actually driving, it's actually just a mix shift, if you will, in the channels. On the next page, we dig into some of the quality elements associated with digital origination. And so here what we're seeing is a stack bar of the kind of balance tiers of what we get through the branch and digital origination. And what you almost see immediately is the real challenge that many institutions are facing around digital acquisition, which is that very high percentage of accounts that are coming in from the digital channel that are essentially remaining unfunded. So while there has been some slight performance improvement over the last couple of quarters relative to 21 and 22, we're still seeing nearly half of new accounts originated are still unfunded at the end of the first month on book. And if you contrast that with branch acquisition, you see only 7%. So really big difference in funding rates. And then the additional thing you see is a really big difference in kind of average funding amounts. And so what you see in the chart on the bottom or the table on the bottom is kind of the delta, if you will. So the accounts originated via the branch channel are kind of 6 times higher from an average balance perspective than those in digital. And even if you control for that zero balance, even if you were to back out that zero balance, you're still going to see a more than 3x, almost a 4x difference in the kind of average balance associated. And so big challenge number one is while banks and credit unions have been able to drive more via the digital channel, it is not incremental. That's number one. Number two is really, really high levels of unfunded accounts, which are, again, more or less worthless. If we go into the next page, we actually get to the third challenge. And the third challenge is retention. And so what you see here with the light blue bar is the retention rates for new relationships originated via the branch. And then what you see from the blue lines on the bottom is the retention rates for those originated digitally. Now, what you do see is some steady improvement from 2021 to 2022, where we had high levels of fraud. So we had very, very poor retention when we were having a bunch of fraudulent accounts open. So that retention has improved. But if you still, even in the most recent quarter, you still see even at the third month on book, more than a 10% gap in that retention level, right? And so, and really what you're seeing a lot of that is those unfunded accounts that we saw on the prior page never actually funding up and ultimately closing out. And so I think that kind of opportunity number 3 here is really around the retention of digitally originated accounts. And just to double click into that a little bit more, on the next chart, what we do is look at the retention rates by funding tier. So what's that initial funding tier? And what you see is, even for digital, if the new relationship was funded kind of north of $1,000 or even north of $5,000, the retention rates start to look pretty good, start to get a little bit closer to the branch retention rates. And even those accounts that have funded kind of above, essentially some level of funding between 0 and 100 retain a little bit better. But it is those unfunded accounts, which is represented by the black line, or the red is really those accounts that were overdrawn with kind of within that first month on book. What you see is those unfunded accounts or initially overdrawn accounts do not retain at very good levels at all. And so really the challenge here, or maybe the approach, if you will, for addressing this challenge is, how do I get funding happening sooner? That's the real kind of key, is can I get the consumer to fund sooner? And if so, then I have a higher likelihood of the ability to be able to retain them. So that leads us into our next poll question. We wanted to talk about the funding mechanisms or funding methods available for your financial institution. So this should be a pick many, if you will. So we put a number of kind of traditional funding mechanisms. So if you could go ahead and select those that are available, and again, feel free to choose more than one, and we'll see the results roll in. All right, I'm still seeing movement on the bars. And here we go. Okay, the most common is the good old-fashioned ACH, account and routing number. What we also see there, very high level of funding not required, which again gets back to the data that we were looking on the prior page, debit and credit card being pretty common, and kind of account linking by API and transfer. Kind of many of you might have been familiar with either Plaid or MX's funding mechanisms coming in at the lowest level. But I think it's probably the one payment method that is probably the last of all of those to appear on the scene, but is actually probably surging in usage. Again, I know many of you and most of the participants in our benchmark do allow customers to not fund. There's always kind of a in-branch, fund-in-branch option. But I would strongly encourage you to take a look at that based on the data on the prior pages and figure out what's that trade-off of, if I do require funding, obviously that's going to cause some consumers to not go all the way through the process. But the flip is, for those customers who don't fund, I ultimately end up getting funding very low levels for those and retention of very low levels. So that trade-off of whether I require it or not is a good one to tackle. With that, I'm going to pass it away from the data here over to Soraya to really talk about the experiences and how better experiences can drive better performance on origination and onboarding.
Well, thank you very much, Andrew. I think that poll was very revealing, and I think your last slide was also revealing in terms of the urgency of funding. And what we really want to think about here is, are originations experiences actually meeting business goals, right? Are they actually meeting even customer objectives here? And when we look at this from our perspective, let's say we've been tracking around 400 digital account opening journeys a year across multiple financial products over the past 4 years. And we do this at a really granular level with a digital banking analyzer. And when we look at that entire journey, what we tend to see is that we see that many of the journeys are disjointed. They're not necessarily built for what you just talked about right in the beginning, which is the preference for mobile, right? And that since you do have a preference for mobile, are these journeys actually tapping into the native features that can smooth the journey through much easier for the actual user? And, you know, when we think about the shopper data that we mentioned, we also ask customers, we ask the shoppers, the recent switchers, you know, why was account opening easy? And 2/3 of them actually said the reason why account opening was easy was one, the application in itself, so there's a lot of work there, and two, setting up the mobile and or online banking. So the enrollment aspect is also really important here. So when we think about what we see on the slide is I would say most of the journeys that we encounter really focus on the product, really have multiple fields per page. It's really a transfer of what you see from online to mobile. There's a kind of a disjointed area whereby you're actually enrolling, and then when you get started, there's usually a pause before you can actually get started to becoming a customer. What we're seeing is a lot of changes, particularly with those digital providers that you mentioned in the beginning that many are flocking to, where it's about the experience. It's actually minimizing the inputs and what the user actually needs to do. It's really providing that immediacy of account. And I think the other part is the funding aspect is also really pushing that. So I'll go into a little bit more detail to see what exactly is that we're actually observing. So when we think about the product discovery aspect, we like to think about from when we think about originations from a more holistic perspective, right? It's not just when you start the application. It's when you arrive, when you move to the brand, what is your actual experience and what are your expectations that are being set here? And when we look at some of the sort of digital only providers that you highlighted have high growth here, it's really about engaging the user right from the start. It's not about here's a product, select a product, and this is what you go to. It's telling them the benefits about everyday spending, saving on that, watch your savings grow. The other part on the other side is if 49% actually prefer applying on mobile, look, it's a no-brainer that some of the competitors actually put the mobile app right at the top of the hero banner and say, we offer an app that works for you. It's the best loved app. So a lot of this is starting that journey to sort of set the expectations of what that customer is going to encounter. And then as you move into that sort of account opening onboarding process, rather than thinking of the user as, majority online or majority in branch, you're actually creating that digital user immediately. What we're seeing is even if you go online, there's a push to go and download the app like you have with SoFi. When we look at Simmons Bank, they have a very specific targeted account and you're there to scan the QR code to open the app and start your journey there, right? When we look at a larger bank, and looking overseas, Lloyds Bank in the UK, they actually push the customer in the hero banner when you start to apply with our app. Go first, do the app first before you even try online. And then when you start your application, when you think about the first thing they actually capture is the example here on the top right with Dave. You're creating your sign-in ID. You're already making yourself a digital user. So you're not going to wait until the back end of the journey whereby you're enrolling in digital. You're actually becoming a user right up front. And so if you think about that, it's almost a sea change of kind of matching the expectations of the consumer to what they actually should be encountering online. So as we move into the actual application itself, and this is kind of my favorite bit here, we ran a speed test to see, when we looked at checking account applications, what's actually faster? There's a lot of debate. Should I have one big page with many fields, right? Or, should I be following the stage where I have fewer fields, but there are actually more pages to scroll through? And what we found is that the time for the sort of what we call the minimalist design applications, which are the ones where you scroll less, you actually have more screens, you're actually using more, again, more of the features of the actual device, which is taps, using other sort of aspects as opposed to actually filling out a field or drop downs, you have a much shorter sort of speed in terms of pushing you through the application. Whereas when we think about the ones which are what we call the standard design, where you have to scroll through quite a few pages, you're actually having to do drop downs as opposed to using your radio buttons. You've got actually more clicks and taps, and actually does create a long journey, and it feels longer. So there are always ways to sort of improve, and for us, you know, it's not just the actual application in itself, right? There's also the aspect of when I'm in the application and I need help, right? So Andrew, you talked about abandonment, abandonment at funding, abandonment at different stages. You know, when you fall off the funnel, what can you do to help customers? The last thing the customer needs to do is actually navigate away from the application and to go somewhere else to go find the question. Or if they don't understand a field, or they don't particularly understand why you need to answer that particular field, they don't necessarily, it's not a great journey to add that friction by which they need to go somewhere else. So if you look at the example on the left from SoFi here, part of the reason why, you know, when we think about fewer fields on a page is that you've got a lot more room to provide that at a glance explanation. So you may not necessarily have to push into a tooltip to understand, what does this field mean? What am I filling out? So all that information is in one place. Alternatively, if you don't want to do this, the other aspect is you need to make sure that help is really easily accessible. That's right at the top. You can access it within the screen, or in the case on the right with Bank of America, you've also got live chat in there to be able to refer, and you can launch that chat within the application without moving you out of the application. So there are alternatives to doing that, but the main thing is, how do you keep the customer in the journey? And this one is probably the most controversial, right? So we, you know, Andrew, you talked about high levels of fraud. We know that this is not going down, right? There, in the industry, we know that part of greatest concerns is around impersonation, in terms of fraud, in terms of a number of different account openings that, you know, many of you who are on the call are concerned about. Our view here is that it's actually probably not going to get easier for the customer in terms of doing identity and verification. Customer information programs are going to need to be a lot more sophisticated. You're going to be actually collecting a lot more data at different parts of the journey. You need the verification for the email, phone, device as well. So you're going to be seeing more OTACs in place that many of, I would say that many of the fintechs already have, many of the neobanks already use. But the other part here is that, you know, if there are particular issues with a customer and you need additional verification, it's very likely that you know, if you think about the customer preference for mobile, they don't want to go in a branch. What's the next best thing to be able to do? And this example here with Monzo shows that, you know, capturing additional identification data may be necessary to deal with the high number of frauds. You may also need to push customers through this journey. And if you're going to build this, you know, if not this year or a couple of years from now, the key aspect here is you need to prepare that applicant for this. Right. Many of these journeys will be new. And the reason why I really like this example from Monzo is they really explain to you exactly what needs to happen so that they're not kicked off the journey, right? So it's saying, you're halfway there. We need to check your identity. These are only very few steps that we need to take to verify your identity. When you take your picture of your ID, make sure these things happen before you take a picture. And then when you have to take a selfie, here's some tips, right? Make sure that nobody's pretending to be. Why are we doing the selfie, right? It's ensure that there's no impersonation in place here. It protects your account from fraud. So there's the benefits that's actually being stated to the customer. The other part, the last point, is the one I really like, which says 8 out of 10 submissions are approved on the first try. So it's saying, hey, it's worth taking the step because actually you're quite likely to be approved immediately. Right. And then they provide the example of, you know, how to record the video yourself. So there are very clear instructions to help the customer conduct the identity and verification process within their mobile. Now, Of course, once all that's done and you're verified and you move into the next of the journey, this is the one that I think, Andrew, you really highlight. So what do we actually do to sort of drive that primacy? And this is really about sort of having that balance between sort of the completion of the application and then moving to that journey by which you're starting to set yourself up to become a customer. As you highlighted, when we looked at the poll, we could see that account linking by API wasn't necessarily as frequent from the audience in itself. What we're seeing is absolutely right, Andrew. We're seeing a big growth in this area, right? So for those who are actually enabling from account linking, we are seeing actually about 3/4 of them actually enabling via API. So this is becoming very common. So just some examples on the slide, like we see a lot of Plaid API journeys. We see a number of Finicity as well as Amex journeys on the slide. So it's a range, but we do see this becoming more frequent. But the other two aspects that I think are also important here is what else besides funding can you do, right? I like this example from Current right in the middle of the slide. So Current, before you move to the funding screen, actually creates two options, right? So one, you either set up your direct deposit now, or you can connect your external bank. So the idea here is you're bringing that direct deposit journey far earlier on so that you can set that up. So we're thinking we want to build deposits in the first week, in the second week, in the third week, right? This is what we're bringing that movement right to the journey when you're actually onboarding the customer. They also utilize what we typically see in iOS design here, which, the most important option is in that very clear CTA. So clearly Current is telling you they want you to set up the direct deposit, right? The later option is far more deprioritized when we look at this screen. So I think, to your question, when we discussed, should funding be compulsory or non-compulsory here? If you do not want to make funding compulsory, you can still deprioritize that option when you look at the screen. The other part, of course, is what else can you can do to make the customer feel like a customer immediately. And the other part is really thinking about, can we set them up with a debit card? Can we set them up with a virtual card? Now, of course, this is far more common when we think about credit card journeys where virtual cards are sort of, getting more prolific. We tend to see this debit card setup more immediate when we think about the fintechs who are digital only. But again, as we can see from the data in the beginning in terms of the preference towards digital providers, right? This is now setting the expectations in the market. I can transact immediately. I will get my card immediately. And I think that's a key aspect in terms of thinking about how do I, become a customer as soon as possible. And if we think about funding, let's look a little bit in the future here. We're not fully here from an open banking perspective. I've pulled an example from the United Kingdom so that you can have a look. So you can see that there is a really very similar journey here compared to sort of the Plaid funding journeys, and I see the other API funding journeys that you might see. But what's really interesting here when we look at Monzo UK's journey is that they're using payments initiation immediately to be able to fund. So open banking takes you to the Santander screen, you then select that, you submit a payments request to that, and immediately your account is funded. And so if we think about the future, what we can use in the future of open banking, part of this is thinking, how can we use what we have now in terms of the ability to fund immediately to get customers to put their money in the account within the entire originations journey. And I think the other part, we probably want to talk, and we had a question actually before we actually started the webinar from one of the attendees. And one of the questions was, do we see similar things? Do we see any other things in terms of any other financial products? And my view is it's not just checking account applicants that need a nudge, it's all forms of all product applicants. So when we look at small business checking, we see some great work here by Novo, whereby they're actually telling you how to become a customer. You're connecting Stripe immediately. You're putting your cash reserves immediately. So this is all contained within your sort of originations journey. When we look at American Express, we look at credit card applicants. How do you drive primacy for that? Well, of course, what you want to do is that if I'm spending a lot of money using my phone, using my digital wallets, I need to add to all my wallets. I should be adding my card to all these different wallets, and Amex lists out all the possible digital wallets so that you can add your card immediately. So, when we think of then, once you're a customer, once you land on that sort of first time home screen, what should you be doing, right? So we've moved from the funding part, we've moved from let's pull some of the money in. Are there any things that FIs can do? And the first part here, is thinking about communication in various forms to actually nudge the user. One example is actually, let's communicate, let's tell them to lock in some great behaviors, right, that will benefit both the customer as well as the FI here. So when you look at Chime's example, very early in the journey, it's actually pushing the customer to turn on automatic savings. So if we're thinking about deposit growth, about building deposits, about continuous deposits, it's not just putting direct deposit, it's actually adding automatic savings in terms of actually increasing that. Then the other part, which I think many sort of journeys that I sort of view fail to do, is actually not telling the user what a great experience they're going to get. When I'm banking with you, I'm the first time customer. I'm very excited to get going here. We can see a great example here with US Bank, which uses interstitials before they land into the sort of home screen, and they're telling you what you're going to get. They're telling you these are the things your account is going to provide. These are the benefits. In this case, they're saying that you'll have some personalized financial insights just for you. Right? They're readying you for this experience. And then finally, when you get to that home screen on the first login, you should be using that screen for communication. SoFi has a great example right at the bottom of the screen where they're actually tracking you setting up your direct deposit to unlock SoFi Plus, right, and to unlock benefits here. So they're communicating to you, they're almost gamifying what you're doing in order to sort of urge action in terms of what you do. So, as we kind of round off this part in terms of, closing off what happens in the beginning, we're very curious to understand, what are, if we run the poll now, what are those primary methods that you're doing when you actually get customers to open a new checking account and they land on that home screen, and when they're sort of, what is that actual treatment that you do? Now, if we look at the poll right now, we've got about, I think programmatic email campaign is pretty much on top. I would love to see, the mobile in-app messaging nudges grow more, but it's definitely email, which is winning the race. And I think we are, so officially, based on the poll results, we can see that 78% of you have said it's the programmatic email campaign. So the first thing you do is reach out to customers on email to sort of really think about what you're going to get them, how you're going to get them engaged, what are the nudges you're going to do, how are you going to communicate to them, and how they can get started with your account. We do have just short of 10%, 1 in 10 of you are using in-app messages and nudges. We have, so I think, overall, we're really seeing the dominance here of email. And I think what we probably want to think about is, should we be using more means of communication when the customer lands on that home screen? Are we actually using that opportunity to communicate to them immediately rather than email? And as I jump into this, I think that this is something that we've seen at Kiranos that's also really important. When I talk about that variety of ways of communicating to customers, we don't necessarily see customers going all on the same path. Right. So what that actually means here is that we need to be thinking of how do we, all the different touches that we need to put to actually communicate and reach customers on the multiple paths that they have. There's no single perfect happy path for customers. They may go through multiple, different journeys. They may go through multiple channels in terms of how they're engaged. So I think when we think about, although we would love to take that 49% of those who prefer to use mobile, or, the other percent who love to use online, and think of there's only one singular way, there isn't necessarily a one way. And what that needs really is thinking about how we need to be communicating to them in a different way. So, Andrew highlighted, what are some of the reasons what are the other things apart from funding that we need to do in order to get customers to take action, or to even do funding, or to do more with their accounts here, right? Particularly when we think about retention as well. So we really need to be thinking in the same way that, other firms who are highly digitized think, right, which is about having always on communications programs. And these communications programs aren't manual, right? They're not also, I would say, basic programmatic. It's really about experimentation, right? It's thinking about all the content types that you want to build, building a big library here, or having a library, thinking about the incentives that you want to give them, and then thinking about the combinations of the two, which will work. And of course, you're not able to do this. Marketing teams are not able to do this by hand, right? This is required. You will need the help of AI to be able to do that. And when we think about that, we hear a lot of questions, and I will say that in terms of the questions, so which providers actually personalize? How do we actually personalize? Our journeys actually personalize? And the answer is yes, there is a way to personalize based on what the customer does, who the customer is, based on the customer actions, and based on your customer data. I think for us, the way we look at it is, because there's no single best communication, right? What your teams need to do is actually manage this library of treatments, whether on email, whether on mobile, and you're just thinking about, what are the hypotheses that might be best for your customer? And what we see on the slide here is a range of examples of the different targeting routes based on the messaging strategies you could do, whether it's welcoming the customer, getting them to fund, getting card activation happening, or even ensuring this deeper engagement. And the idea here is that you work through these hypotheses and you let the AI identify and manage that customer level decisioning of the treatment, because it's not possible to personalize at an individual level on a manual basis. You need that help from tech. And so I think, when we think about this from a sort of overall view today, I think I'd really like you to take sort of 3 takeaways. One, based on what Andrew said, that funding in the first 30 days is critical. You can see the drop off in that line. If that action is not taken, you need to be putting mechanisms in place for that to happen. 2 ways to do that. One is ensuring that you're locking in that behavior on onboarding. I reiterate the example here from Current, where they really push direct deposit very early on. And then, of course, the other part, which is recognizing that your customers have different preferences, that they have different journeys. And in order to do that, in order to nudge them to fund, to nudge them towards primacy, it's really about scaling the way you communicate to truly personalize at the individual level. With that, I think we're going to move into Q&A, a few questions, and we'll have a look at the questions within our board. So, right, let's have a quick look. So I think, Andrew, I'm going to start a question with you, which is, and I think you showed some of the data, and I think some of the data actually answered this question, which is, how viable are digital checking accounts without a branch presence, right? So especially for a primary bank.
Yeah, I mean, what is very clear is, 40% were choosing fintechs, another 9% were choosing what we describe as kind of digital banks. I know that's probably a fine distinction for many, but that can include folks like USAA or Schwab or other banks that are, again, not kind of branch oriented. but are less kind of app-based, like some of the fintechs, like your Chimes or even like your PayPal's. But I think what we're seeing is nearly half, between those two categories, nearly half of the new primary relationships are choosing one of those institutions. So it absolutely is viable. I think the key is, what is my value proposition? What needs am I actually meeting for consumers that the traditional players are not meeting, in order to be able to break out and get kind of new customers at scale?
I think that the examples that you shared, when you see the growth of the digital digital only providers here, for me, is the answer is it is viable, right? We've seen a lot of growth. We've seen a lot of growth, not just within checking, right? If you think about this is outside of checking. We look at providers for all financial products. This is where we see the greatest growth for us. And the answer really is actually excellence in digital, making sure that the journey, the origination journey, works for the customer. It's not transferring what as what your preference is in terms of what you sort of your expectations for the journeys. It's really understanding what the digital customer's expectations are and transferring that in place. We've got another question, and I'll take it before I think it's kind of linked to the last one. We had a question which was, what are the best methods to reach out to the new digitally originated customers, phone, email, etc.? So what I found really interesting was the last sort of question that we had, the last poll question, was that 78% of you actually said programmatic email campaign as that. Now, that is definitely a very strong tool to be using. But what we can also see that we saw lower percentages in terms of saying mobile in-app messaging or nudges, online banking, checklists, right? So I think when we think about the home screen, for me, when you're a new customer and you're going to go back into your account, the first thing you're going to see is that home screen, or even, as you launch into your login, there are interstitials that you can add, right, before you even get to the home screen. So if the majority of your customers are interacting and accessing their account, that is for me a place where there's prime opportunity to ensure that there are really good containers by which you can have changeable content, by which you can communicate, by which you can even provide different treatments on that. And the example I shared earlier with SoFi shows exactly that. They have a long scroll where there's a lot of communication in terms of actions that the customer can actually do.
Another question was, I don't think anyone's gonna be surprised by my answer here, but what is the kind of the one thing that you could do that would drive improvement in digital origination? And I'm just gonna go with funding. Like, I'm getting a higher level of funding embedded in the experience, providing options that are easy for the customer to be able to partake in. But I think getting funding up is the biggest thing, because of obviously what we saw with that retention. So not very sexy answer, but
I will say, so this is where I will say there's a couple things. I would say 100% is the funding, right? In the sense that, but my question is how to fund, right? So the funding for me is requiring minimal data entry, right? Perhaps the taps, right? Smoothing that way to do the API linking, making sure that API linking journey works, right? So I think that's the other thing, that when we do a lot of testing, sometimes it doesn't. And so that it's a stable journey, and you're locking that customer into that permanent link to the account already. Keying codes, keying account numbers isn't a great way to do it, right? So you don't really want to have your customer to take a break and actually pull that number in. The other part is we're also seeing an increasing sort of number of options for debit card funding as well. Now, for me, that's not necessarily ideal, because it doesn't necessarily lock customers into that sort of account-to-account link that you might have. And of course, the most important part is setting up direct deposit, right? That has to be one of the first prompts that you set to customers, and if you want to drive primacy, and that has to be done very sort of close towards the end of the journey, if not the beginning, as you kind of get into that home screen. We've got another question, actually, and a question that says, how does this vary for banks versus credit unions? And okay, Andrew, I'm happy to take that first.
Sure, go for it.
So for us, actually, we don't see a vast amount of variation here, because when we think about credit unions, there's actually, you know, just like banks, there's a range of institutional capability in terms of the largest credit unions who've really invested into their sort of originations journeys as, you know, banks. So from my perspective, you know, there are some really great digital excellence that we see with credit unions that are also trying to ensure that, you know, it's much easier bringing in members. Now, of course, with credit unions, there's also there's the extra step that if you are a non-member, that does add friction and barriers to that. Part of that is also thinking about how do you incorporate and link that within the actual account opening journey as well in order to do that. So I think you know, it's probably more difficult for credit unions that have more requirements of the customer versus those that have sort of, you know, availability towards broader membership. But you know, I do think there are a number of vendors, there are a number of partners that credit unions who work with that also enable, you know, a much more streamlined origination journey.
Yeah, I'm with you on that one. Obviously, there's the additional step around membership, but done well, it can be integrated into the flow and not actually feel burdensome. You know, I think we also see this moving a little bit outside of checking, which we've been talking about today, right? Is, you know, especially as you get into credit products, right? How do I make sure that I'm essentially creating a membership, funding the share account, right? But then also doing the credit card application and finding a way to seamlessly integrate those into one experience, I think is really critical. It's harder, but it can be done.
Okay. Let's have a look whether there are any more questions here. Look here.
I think there is a question about how do we access the presentation, and unfortunately I'm going to say I'm not exactly sure. Maybe Megan can make sure that we describe. No, it is going to be available, but I think that all of the participants should get an email after the webinar with a link to be able to get a copy of the presentation or at least the recording of the video.
Okay, great. And I think there's another. There's another question which is also around business accounts. I touched upon that earlier in terms of how, for example, Novo within the originations journey. Actually, what's most interesting is when we think about business accounts and originations, there's usually more of a lag. It's far less instantaneous before you get to approval. What's interesting in terms of what they do is once you've submitted your application, rather than make you wait, have pauses, kick you off the journey, they're actually taking you into that journey and actually getting you to set up your account, whilst you're waiting for your approval. I think this is a really interesting approach, and this is actually quite a fintech neobank approach to originations. I often get questions in terms of, should we be collecting this data? Isn't this perhaps just a waste of time? They may not actually be approved, or they may be pushed to another journey. The main thing is that they're actually using the customer's time whilst they're online to get the account set up, and then the final completion. And I think the other part is also the same. I get the same question around, should we be capturing email addresses early? The answer is, of course, if you've got a programmatic email campaign and you find that customers drop off the funnel, this is actually an opportunity to bring them back in. So there are sort of a number of reasons why you could want to collect that data, and business bank accounts is actually one example where having more data about the customer may also be very helpful from a marketing perspective as well as a customer setup perspective. Okay.
All right. Well, thank you all for joining. Thank you for great questions. And Megan, I think that's it, so we can wrap it up.
Okay, thanks everybody so much. Have a great day.